Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, let's start the music here. Charts don't matter. All that matters is this non-farms news that's about to come out in a minute that we've been waiting for 2 months. Let me come in here. Will it show me ADP? For some reason, the News Squawk is not showing me the US ADP weekly employment change report. We did get that earlier. I think, though, really hard to predict what's going to happen, but I do suspect the balance of risks is to the downside, which is to say that the numbers are weaker than expected, which would possibly cause, well, it would probably cause the Treasuries to buy, but it might even cause the S&P 500 to buy if they think that, we're going to get more stimulus. So that might be confusing for some people. And but then I also think that you might see like a really big pop and a big move that retraces, because there's going to be a lot of reason in the report to doubt the numbers. Okay, like once people start to dive into it, like Powell said, there's going to be some reason to doubt the numbers. So strap in. I highly recommend against having risk on at the moment going into the news. This is going to be crazy. Here we go. Okay, they are both up. Okay, the non-farms payroll is actually higher than expected at 64K versus 50K. And what about... Okay, core retail sales much higher than expected. Spot 4 versus spot 2. Why did the Treasuries buy on that? Well, what about the unemployment rate? The unemployment rate went up 4.6 versus 4.5. Very interesting. Not really what I expected at all. I would say across the board, slightly better than expected. I'm not sure why the Treasuries popped as much as they did, other than just volatility. Okay, big iceberg at 18. I'm really not sure what I want to do here. I think the gutsy play is sell the Treasuries, then saying, this is a nothing burger, is going to come back. But that is an awfully scary bet. So let me come back to these numbers. Unemployment 4.6 versus the expected 4.5. Retail sales month over month is 0 versus an expected spot 1. Core retail sales spot 4 versus an expected spot 2. Okay. I guess spending on transportation has been down. What about average earnings? Oh, maybe that's what it is. U.S. average earnings month over month, spot 1% versus an expected spot 3. That might do it. And seeing the unemployment rate go up on the household surveys also. But again, that was the thing that Powell kind of warned about. You know what? It's hot in here because I didn't turn the fan on. Hold on. I'm like, why do I feel all moist? Also, my camera's dropped a little bit. Well, it's a little better. Okay, they did fall back a little bit. Yeah. Missed it. I was just thinking, like, I want the 10-year to be here. So we'll rearrange that. But I was thinking, well, maybe on 16 it would be a good spot to do it. And it went right through it. So I guess I kind of missed it. Maybe I should feel a little sheepish that I didn't take that, because it does look like it was worth a good trade. But I mean, it's sim, so does it really matter? I would have taken it on sim. I wouldn't have taken it live. But you know, that still was a scary trade. No way I was going to do that, especially like the first 5 minutes of non-farms. Really, really dangerous. So that's okay. I'm gonna have to play that. Oh, interesting. Okay. So they are saying that the hold on a second here. Why is this? Okay, so they're saying that the response rate for the household survey was significantly lower than usual. So that maybe explains Powell's comment that the household survey might be deceptive. Lower response rate. But why would the rate be lower? I kind of feel like, I don't know. If you were unemployed, would you be more or less likely to answer the survey? I don't know. We'll think on that one. Okay, now Uzi is saying that there was the revisions too. That, you know, that's a good point. I gotta come over here to Twitter to see those. Change in non-farm payrolls October. Whoa. October was revised down 105? Oh no, the survey collection rate was higher than usual. Am I hearing that right? Why is Elon Musk talking about this then? Am I reading all this stuff right? Okay, so you said negative 33. I don't know where you're getting that number from, but Live Squawk is saying that October was previously 119 and is now negative 105. Which which we talked about this, right? When we got the October number and we were like, yeah, and then watch them revise it down. That's a big down revision too. That number can't be wrong. That number can't be right. FJ. Yeah, I don't. Hold on. Let's see here. Oh, total, you say it's down 33K. Okay. Where's that page where they show their revisions? Here we go. Oh, okay. I understand what's going on here. Okay. So September was revised down from 119 to 108. And October didn't have a revision, or didn't have an original one, right? So that was just negative 105. So if we had gotten an October jobs report, it would have been really bad. Negative 105 is really bad. And then to see 64 in November. And then that means that they revise this one August and September, I think. Anyways, so I think you're right that the revisions were negative. I don't know. Somewhere in all of that you sort out, I think you're right that it was negative 33 for August and September. Because this one got revised down and then this one didn't have an estimate, but... Oh, this is third minus first. We want third minus second. There you go. Negative 22. And then negative 11, and that's where you get the negative 33. Okay. So that's that. And then the negative 105 that I'm reading is just... They're calling it a second revision for October. Because we never got the first number for October. That one's just going to be omitted from the series. But a negative 105, that's a pretty big deal. 64 for November is also really low. But the expectation was 50K. So it was better than the expectation. But that kind of suggests to me somewhat of a confirmation of what we've been saying, that the job market coming out of the summer particularly was basically completely frozen during the shutdown. The jobs market just completely shut down during the government shutdown. And I guess you could call it a mini recession. Like it was straight up a recession, but it's probably never going to show up in any of your metrics of a recession because it's not going to be 2 quarters, right? It's going to be a month, and in a month when we didn't really get data, and now we're already into the recovery is what I think is going on. And I think, does this confirm or justify the rate cut that we just had? I think it does support the rate cut that we just had. But we just had it. That's done and over with. Who cares? What matters now is the next rate cut. And what I'm seeing there does not necessarily say to me that we absolutely have to have a rate cut in January. right? That's kind of like, we can wait. We see where it is in February. Maybe we cut again in March. By the way, Mr. X KY1XJ says good morning. Welcome to the stream. That is a weird name. You should change it. So now I'm interested to see if the treasuries decide to push the lows of the day. We see the 10-year at 4.2 today. Okay. The cumulative delta on this, very fascinating. I don't think I've ever seen such wild, disorganized swings in volume. That kind of makes me want to buy it and trade it on it reverting again, but I don't really like the pace of the activity at the moment.
Block buy.
Okay. Well, I think you buy that one. Wish I had taken that initial with 2 contracts, because I could be taking one off right now. And then I could rest a little easier. Because that was a pretty good buy and a good 2-3 ticks right away, but I'm not seeing as much follow-up as I would like to see at the moment. Even though it does appear that there is a meta order buy in progress. So if I had taken the second one, I could maybe take the one off at the open and then let the other one ride. And I guess in the end, I wasn't expecting it to jump 2 ticks for me right away. So I should be happy. I should be happy, right? Should be happy. Taking the 3 ticks. Be done. Yeah. Definitely getting some hints of that low latent liquidity now. Yeah, see, not really putting a lot on the bid at 10.5. And it's decreasing at 11 as well. So there's actually probably a bit of a gap there. Okay, they're going to hit 11.5. So a lot more at 11.5 though. I think the other treasuries are banking off that first deviation in CB. So there was definitely a liquidity hole there. They were able to climb over 11.5. Let's see what happens. That 12 pulled. 12 pulled. It hasn't gone bid yet, so we'll see if there's an iceberg there. Interesting. 9.57 went, and then they traded 9.45 back into it. So, I think that take there just kind of widened the hole. I think that there could be some more buying to come through, but it might take a while. And right now I'm just kind of seeing that I caught the bottom of a hole, and I'm maybe seeing the top of the hole, so I should maybe take the contract off. And so I can maybe, if I really want to take a long and try and let it run, I might have another chance to get into it somewhere in here. But let's see. So if we are outside of 12 within the next 20 minutes, then I'm wrong, right? Which means that they should immediately just drive right through 12 and just to doubly make sure I look stupid. You know, though, there was something about that trade that felt really good, because I didn't even feel like I was that strapped in, you know. And then I heard the block buy, I saw the number, and I'm like, okay, fine, whatever. Like, you know, it's just the intuition was like, okay, because what I'm looking for here, or not what I was looking for, I definitely was not expecting it. But I did see it go down, and I kind of felt like, you know, well, first of all, I do kind of think that the net, like all of this news and everything, is maybe a bit of a wash. Right? It's too complicated, but I don't really see the treasuries dramatically repricing here. So that's why the short really made sense, and in retrospect, I really should have taken that, right? But when you have a big meta order going one way and then you get a meta order of equal size going the other way, the second meta order tends to have more impact, especially right at the very beginning. And that's often why you will get these trades where like you're catching a good winner and then like you give half of it up. And it's just like that and you're like, what the heck? Like, how is it so quick? It's because those orders going the other way have more impact. So when I saw that we were at the bottom and we were kind of touching some of those volatility levels, and I saw those aggressive market orders going the other way, that's why I reflexively took it. Now, I was expecting maybe a bit of a larger meta order than what we got, because I only got 5K here. I would have expected that to be 10K. But I could see that it had formed a hole, so I took it out. Where did you take it? I took it from 10 to 12, so I took 4 ticks there. You can see it because you see that 6,534 right there. There was that, and then oh man, where is it? I don't even see the block buy over in here. That's weird. Am I on the right month? It's a little weird. Oh, no. What's that? 09. Yeah, it's 09.5. Yeah. So there was a 3K block, but 3K of that was a block buy. Okay. So when that came through, I said, okay, you buy that. And I just was really quick. Because often I feel like, I'm sitting there watching it. I want to make the trade. I'm stalking it. And then I see the thing. And so I finally convince myself to click in. And then it works out, right? Like that's usually where and that's where I'm saying like I didn't really feel strapped in when I did that. I had kind of like given up. I'd kind of been like, well, I probably missed the biggest trade because I was too afraid of trading in the first 5 minutes, right? And then it happened and the body just reacted. It was like, all right, fine, bye. And it worked out. But the thing that was so nice about it was like, first of all, I felt like it was almost like a reflex. And second of all, it like immediately turned out for me. I probably could have taken it off a lot sooner than I did, but even the taking it off at 12 so far, it looks like it was a pretty good call. Granted, it could go a lot further, so we maybe could have held it. But in terms of what we trade, that when you get that liquidity hole, like we're kind of stuck in there, and you just kind of want to get out of that. I think we played that almost perfectly. Yeah, when your neural network already knows. Really is like the thing is I can explain it. Like we have a thorough enough framework to explain how the market works and why we're doing what we're doing that I can explain it after the fact. But I did not think all of those things when I took the trade. I heard the block buy, I saw the number, I saw where we were at, and I knew that you buy that. Their neural network already knows, yeah. The intuition is faster. And then after, so that's kind of an interesting thing is like when you take the trade, you have to, so you're going to be using system 1, right? System 1 is like your intuition and system 2 is like the logic. So like when you get in, you're going to use the system 1. And then you have to use system 2 to say, okay, did this actually make sense? Was I actually getting something? Are there reasons to not get into this? Like I forgot about something, some news coming up, or other risks that the intuition didn't consider. No, okay, then I stay in it. And then I have to go back to system 1 and stay in system 1 to see the exit. So you have to switch back and forth. And I think one of the problems that we would run into before. One, the network was mistrained because you weren't looking for the right things, right? You didn't have this framework that it's really, we're trying to predict what other people are doing. We're trying to predict future orders. So that's the right goal function to train the neural network off of. Okay. And then 2 was you didn't understand the market well enough to be able to do the logical side of it correctly. So when you've got that going on, then what happens? You get into it and you're just questioning yourself the whole time. So yesterday we were talking about, well, you know, we have really, really great content, but our content doesn't seem to do as well as some other content out there that I think is really terrible content. Like, it's not just that it's not well produced, like, you know, they don't have an amazing camera, they didn't edit it well, and it's not that they don't have very good information in it. Is just like, what is it that they're doing in it that would attract people to watch the video? And so after talking about it in the stream, you know, my brain was churning over it the whole day. And I kind of, in the end, ended up remembering something that we had talked about before, that a lot of traders kind of have this fundamental, I would almost call it a narcissistic wound, right? Like, a lot of traders feel like that they were passed over in life for different reasons, and they're trying to prove to the world that there was something. It's really what it is. And I don't really have that. I probably have every reason to be like that. Like what happened to me over the past year in the job market, I have every reason to have a chip on my shoulder, right? But I just don't do that anymore. Maybe it's the ADHD medication I'm on. It just says, nah, everything's cool. Everything, you know, it just keeps you positive all the time. So what it does is you just have a feeling of like well-being. And so maybe the case is that I can't relate to that thing that other people are seeing in some of that content that's attracting them to that content. I can't see it because I don't have that wound. But then at the same time, I really feel that getting over that is key to having success in markets. Oh, they did get outside of 12. So, you know, I think that locally it was pretty good. But I'm still going to say I was wrong because it's been less than 20 minutes. Right? Basically, I could have gotten twice as much out of that as I did if I had decided to hang on. And we are getting that. You know, the thing was, in this case, which, by the way, it's not very often that I see this, I was stuck between, there's a liquidity hole here locally, and the meta order is not done. There's got to be more to this one. And I went with the liquidity hole. And perhaps in this kind of situation, we would expect the market to be pretty volatile. We should have held out. I think I was just really nervous for some reason, but I would say I was wrong. It was a mistake on my part. We still made money. It's okay, but maybe an optimization we can make. That in a case like a non-farms payroll, that maybe we should care more about the expected change in cumulative delta than we should a local liquidity hole. anyways, I kind of feel like that to really have a good framework to do this, you kind of have to realize that it's all a facade. Everything that you think you know about markets, everything that we've been told about markets, that you heard in grade school, it was really just a facade in front of a bunch of insecure guys trying to prove themselves, right? And we all have this idea that I'm going to see the pattern and make money from it and be a genius. And when you are able to see that that's all a lie, and really what you're doing is you're just predicting what other people are going to do. See the situation, realize what they're going to do, and do it before they do it. Right? Then you have the framework. So it requires a certain degree of humility. I feel like, you don't want to call yourself humble, right? Who calls themselves humble? But I really do feel like I went through that for years. Even though I knew better, even though I had been taught better, I still went through it. And it took a long time for me to realize, no, like all of that is nonsense. All of that is just an illusion that we've created in our own heads, because we think that the market's supposed to be this big extravagant thing. And once you realize the market's not this big extravagant thing, and having success in the market does not really, prove your worth to the world or anything like that, then you can actually see what's actually going on. Because what's actually going on, and I think in some cases, is kind of stupid. Like, honestly, I think what's really going on in the markets oftentimes is really stupid. We assign so much significance and importance to what the market thinks. And like ultimately at its heart of it, that's the big thing, is I think that we assign this huge significance to what the market thinks, and that's dumb. It's an inanimate thing. It doesn't actually think. It gives the illusion that it thinks. It gives the illusion that all information is being factored in. But the reality of it is that it's smashing all of this information together, and it's giving us an answer by putting all of that information together. But the answer that it comes up with is not even remotely close to the correct answer. It just happens that doing that process and getting an answer is so useful that we're able to avoid bottlenecks in the economy, and that's why it's so valuable. Right? But if I go and I take somebody that they've got that chip on their shoulder, they're like, I'm going to prove to everybody, they passed over me in high school. I didn't really go to college because I just wasn't interested in it, but that doesn't mean that I'm not worth anything, and here I'm going to show you. You explain that to that person, they won't believe it. They won't believe it because they've based their whole personality on figuring this thing out. And if you tell them, well, there's not really a pattern to figure out like you think that there is, and it's not really significance or prestige in it like you think that there is, that their ego immediately recoils in horror. No. This is going to be the thing I'm going to keep going, and this person is just old and bitter. No. It's because I've been through it, and I've realized that prevented me from seeing the answer. So how do you take other people through that? Because it feels like whenever I run into that person, there's nothing you can say to them. There's nothing you can say to them. what were you saying, Big Toasty? I was wrong about the ES yesterday. It kept on falling below 6,900. Well, you know what? We never went through the charts. Let's go through the charts because there was some interesting stuff in there. Oh, and I guess we are supposed to roll over oil too. Let's do that really quick. So we should be on G now, right? Yeah. G. You can lead a horse to water. You can't make them drink. Yeah. Well, so one of the things for the video that I guess we're going to record next week and we'll have it out like the first of the year was kind of saying, well, look, I know what you're going through. I don't think that I leveraged that enough. Like, I feel like I understand traders in a way that most people can't, just because I've been around it for so long, you know? And I'm so cerebral that I just want to immediately go into the answer. Hey, market is statistically efficient. It's not informationally efficient. But people don't care. They're not going to listen to that until they've first decided that they're going to listen to you. And why are they going to listen to you? Because you're a millionaire, obviously. Well, I'm not a millionaire. I think a lot of people look at it and go, well, he's been doing this for 10 years. He's not a millionaire yet. Well, that's because it's not as lucrative as everybody thinks it is. But I think we've done really well. I tell you what, actually, like with this trade that we did today, granted, I haven't caught a big one. Like volatility has been low. So I think the thing that I've been seeing in my performance lately is that I've always struggled big time when volatility is low. And we've been able to make some very precise little scalps, and the win rate on it is insane. Yeah. So really, really happy about that. Well, you know what? You're not a millionaire, but you're not poor by any means. Maybe you just need to flex a lot harder. Maybe. So this is another thing, though, Paul, that I think is really bizarre. In my opinion, the biggest financial flex that you can do right now, really the biggest social flex that you can possibly have in our society right now, is having a large family. Like, seriously, I really don't think that it's the economic difficulties that are preventing people from having children, but having children is a huge financial burden. Having children in a house, to be a millennial that owns a home, has multiple children. Yeah, you know, you have a nice Toyota van. You're doing pretty well compared to most people. There's going to be plenty of people that they have like a bigger yearly salary, but it's because they live in the big city and all of that gets eaten up by the housing costs. And when you really look at like what do they have? Nothing. They have their job and like their whole life just revolves around the job. To have the family is really, really difficult, and most people don't have it. But people don't value that as much anymore. It's really quite a weird thing, because once you have a family, you start looking at other people that have family, you kind of realize that there is a whole other like flexing game with that makes every other kind of status game seem stupid, you know? But because almost nobody well, so few of my generation are actually having children, they don't see it. And the Gen Z, like, that's not anywhere close to their radar, right? So you're right. Like, I could flex that harder, but I don't think that it would convince anybody. You know what I mean? Yeah. So, anyways, we're gonna talk about the charts. We want to talk about the charts. Okay. Yesterday, the S&P 500 took a bit of a dive. And I was so one of the reasons I was thinking about all of this stuff was that I commented on, there was this guy on TikTok, and he was like, well, if you're not a millionaire yet, then why are you taking a break? Right? And my immediate thought is, okay, so you have this chip on your shoulder, you need to be successful, and you think that if you just never take any break, that that's what's going to get you there. But in day trading, it doesn't necessarily do that. You just stay locked in, and your anxiety levels go off the clock, and it just like screws up all of your bearings. You have to keep yourself grounded, and that means being disconnected from the market sometimes, right? And being really locked into the market when it's not doing anything, it can be really harmful. That's when you can lose the most. So then he responded back. I just said, let me tell you something about volatility. That's all I said. But that's what I was thinking when I posted it, right? And he was like, well, the market sold down pretty hard, right? Well, like it did seem like a big move. Like when you look at the 5-minute chart in particular, we come back to this yesterday. Like that looks like a significant move until you zoom out and you realize that like almost every large move that's happened in the past week was bigger than that. This is bigger than that. This is bigger than that. Yeah. So coming back to the volume profile, you can also see it. Right? They went down to where the RTH said that they should go based on volatility, and then oscillated around that. So we did get a big meta order sell, but it was actually in line with volatility, and volatility is low. That's what we saw yesterday over there. Now the Treasuries, they had a curious move higher, but then later in the session that completely got wiped out. And here you can see off of the non-farms news, the big spike. This initial spike still doesn't make sense to me. I think that you just, when we see that on the charts later and you're like, oh, well, we touched 225, so if we get above that, that's significant or something. No, doesn't matter. It was just a coincidence based on volatility that we went there. You're probably better off just like deleting that candle from the chart, pretending it never happened. Okay. Another thing we need to note, oil went below 56, and that's a pretty big deal. It's been a long time since we've been that low. Good thing for the economy. There does appear to be a supply glut in oil. Gold and silver, they're doing okay. It looks like gold and silver are kind of heading up at the moment, and copper, well, they kind of lost some of those highs and are at the lower end of that range, so that's not good. But the Japanese yen continues to be on the up. That's good. And the dollar down a little bit, down to 9. Is it really the dollar all the way down to 97 now? It's so funny because it was only like last week that we were at 100. So that's actually a pretty big move in the dollar. And Bitcoin, what about Bitcoin? Oh, that's right. Yeah, when the S&P 500 sold off yesterday, Bitcoin took a dive. Now, well, let me bring that back up. I wouldn't say it's too much damage, like from a technical perspective. I think it's so funny. I still read the chart, right? The chartists are not going to see that and be like, that's bad. In fact, they might even kind of see that, like, here was the low, and now they're kind of bottoming out here. So they might actually look at that as a cup and handle buy signal, right? But the thing that was curious about that in Bitcoin was that Michael Saylor had announced another buy. So it seems to me that MSTR likes to buy on the weekend, perhaps to maximize their impact. You pump it up big over the weekend, and then Bitcoin is the talk of the town all week, and that attracts a lot of buyers because all of the media attention it gets and everything. But this time, they bought it up, and then Bitcoin immediately took a puke. So they're basically underwater on every purchase that they've done this year. That's wild. I don't think that means that they're in the death spiral, but something's definitely going on there in Bitcoin, right? And I almost wonder if there's something going on where they're like, well, Bitcoin's not going up, and because it's not going up, MSTR is more pressured, and seeing that MSTR is pressured causes people to sell Bitcoin. So they're not to the point where like the leverage forces them to reduce their positions and then it turns into a death spiral. But I definitely see the death spiral possibility there. Oh, okay. So while we were doing that, they came all the way back down from 15. I am actually very surprised by that one. But I think that is because the S&P 500 took a pretty good jump there. Okay, Hazard is speaking. Oh, am I not? What's going on over here? This S&P 500 chart is not updated. So did the Treasuries move down because of something that Hazard said? So I hit here, I refresh the data, and it's still going. I might need to restart NinjaTrader here. I feel like I'm jumping all over the place because we were talking about kids and stuff like that. You know what? It's something else that I see, like when I'm on TikTok in particular, and you see people, and like they're in front of a blank wall, like there's literally nothing in the background. It's just a plain white drywall. I'm always like really off put when I see TikToks like that. Like, why are you trying to tell me how to live? You have nothing. Like, you don't even have a woman around to decorate the house. There's nothing on the wall. That's what goes through my head. Okay, it is. Well, it's NinjaTrader is not crashed, so I don't feel that restarting NinjaTrader would fix it. But I am having some sort of a data issue. $68.68, huh? I don't know. That's curious. That's very curious. Really want to see the 1 minute chart in ES now. By the way, the Treasuries bounced off of that RTH volatility level pretty exactly, didn't it? So now that I think that when we initially started this, there was kind of a few little wonky things and all of that. But now that I really think that we got all of the math and everything dialed in, and you look at it, it's not just like, yeah, it like there's a tendency to bounce off of those lines or things like that. No. Like that line is like the extent almost every time. The number of times that they will go to that and bounce off of it is insane. It really is. I bet you that if we tested it algorithmically, it wouldn't be profitable in the long run. But in the short run, you just fade those edges. Okay, well, I am going to try restarting NinjaTrader, even though I don't think it's going to help. Well, okay, I did that, and it's not responding, so maybe there is something in the background that is, you know, broken. Okay, that fixed it, actually. So now I can see the S&P 500, they took off initially, and they're a little bit lower. So there's actually a pretty strong amount of positive correlation between the treasuries and the equities at the moment. And the one that actually took off was gold. That's interesting. That gold took off as much as it did. That's a bit of an aberration. That I think you're going to start to see a lot of money managers talking about that. Let's recenter here. Because they were making a recovery here in the treasuries, and they just got shoved back down. I wonder if you could make the argument, yes, the labor market was having issues, but it was mostly because of tariffs and the government shutdown. And so cutting interest rates doesn't really help. And if you do nothing, the labor market will just recover on its own as people start hiring again. And ergo, by cutting interest rates, you're going to juice the economy. And so now, because, I mean, the treasuries are moving down a little bit. And I do think that the jobs data does kind of suggest that like there was a temporary freeze on hiring and we're already coming out of it and normalizing. I think my counter to that argument would be that the interest rates really are too high. There are parts of the economy that are just being absolutely devastated by the high interest rates, especially real estate. And we're in for a world of hurt if we don't get those rates back down. In fact, the issue that I'm seeing now is I think at 3%, we get back to a neutral rate. And that neutral rate might not be enough to fix the housing problems, for instance. And like, politicians aren't going to do anything to fix it. So this may just be the problem for the next 20 years. Ugh, I don't like to think about that because I want to move. I spend like an hour and a half getting home. Getting out of Utah County or Utah Valley is a nightmare. A nightmare. So I should move there. Might not be any better if I move. I mean, it might be shorter, but I'll probably still be frustrated by all the people. Because the reality is that place is, it's like San Francisco now. It's turning into a metro area. I think, one of the things is like, why did I end up taking a job so far away? Couldn't fate have found for me something a little closer? When I go down there though, like, I can see all these cranes, like they're building more. So if there's fate to deal with it, maybe part of it is so that I can see what's actually going on down there. That area is growing crazy fast. It's not slowing down. So there's the open. Maybe I should look into the way that the indicators play the sounds, because I really hate that if two of them happen at the same time that they cut each other off, and so oftentimes we don't hear the opening bell. So I was given a confused look because apparently the Europeans are recommending more vehicle emissions targets that sound kind of crazy to me. Okay, so here's one. From r/layoffs, 6 months of silence and starting to think my title was the only, and then it doesn't. I think he got cut off. I wonder if this is like AI, because it didn't. A human would have realized, oh, my title's too long. I was director of marketing, managed a team of 12. People used to ask me for coffee to pick my brain, but I got laid off in June. Since then, 312 applications, 14 screenings, 4 final rounds, 0 offers, and the silence from people I used to mentor is louder than anything. Watching my ego dissolve in real time, day by day, replaced by this desperate, pathetic hope every time my phone buzzes. Usually just spam. I'm starting to wonder if I was ever actually good at my job. Maybe I was just at the right place, the right time. My wife tells me to take a break, enjoy the downtime. Enjoy what? Sit in my home office, refreshing email, rewriting my resume, changing led to spearheaded, change spearheaded to orchestrated. It doesn't matter. I'm 42. I feel like I've been erased. It's just a PDF and a pile of other PDFs. The market is an inanimate thing. You pass all of the information into it and it comes out with an answer. The answer that it comes up with is not perfect. It's just good enough. Good enough to resolve the supply and demand gluts. And some markets are better than others. Seems to me that there's something is fundamentally broken in the labor market. And I can only hope that if the labor market recovers here, that a greater labor supply shortage kind of forces companies to improve things. But y'all said to yourselves, well, because I am the director of marketing, that means I'm the boss. That means I'm worth more than all of you. That means I'm a better person than all of you. Because the market, the all-seeing, all-knowing arbiter of truth, has deemed that I am the best. And that's not what it means. It's not what it means. Might mean, quite frankly, that you should have been CEO of the company and you're never going to get that opportunity to do it. Maybe you're worth more than you think. This guy that got laid off. So don't sit there and say to yourself, well, because I'm having a hard time finding a job right now, that reflects something fundamentally about me and my worth as a person or my worth to society. It doesn't. It means nothing. You need to come to a fundamental, like, what is the word? Like you need to come to like your understanding of your value ontologically, the what you are just intrinsically worth simply by existing, and not base everything of what you think of yourself based on the market. And coming to an understanding of that will make it so much easier to get out of the rut. I'm gonna take this. does kind of look like maybe the downside is over. We're just going sideways, so it doesn't look like anybody's picking it up. So we might just settle somewhere in around here. I'm still thinking about, I'm still typing here. I'm still thinking about how I want to put this. Getting pretty okay there at 10. Kind of back to the area where I took that one trade. Okay. Oh, this is the PMIs. Yes. I didn't think that they were going to react to the S&P PMIs as so much. But it looks like services was 52.9 versus 54, and manufacturing was 51.8 versus 52. So all of those numbers lower than expected, and so the treasuries jumped a little bit on that. Just keep coming back to this thing that really the market is about satisfying supply and demand. And to turn that into that the market reflects the true value of everything is such a gross abuse of what the market is really for. By all means, do everything to make money. But please just stop thinking that this is a reflection of everything. That you've had success in the market, that means that you're better or more valuable than other people. This does so much harm to you in your life and society as a whole, and more importantly, your soul. I think that it just destroys people. I can see it sometimes when people become too obsessed with what the market means about them. It's like the light in their eyes just goes away and they just become a dry, empty husk. A bit more iceberging here at 10, so. Hey, Paul, I find it crazy too sometimes, the crazy belief that the market is perfect while also knowing and saying the fake things are real, i.e. pump and dump, scams, lies, etc. Yeah, from a lot of the retail trading lore is really quite contradictory, isn't it? Yes, very much so. Like, how can you say that markets are perfectly efficient while also saying, there's pump and dumps and all of this other nonsense going on? But I kind of think that that's part of what drives it, right? Is that people come in and they want to participate in the market. And once you start participating in the market, it's so obvious that markets aren't perfectly efficient. I really don't see how anybody can interact with the market on a daily basis and think that markets are perfectly efficient. Like these people that came to that conclusion a couple of decades ago, I really think that they must have been academics that weren't actually trading, right? Weren't really there on the floors watching. And so when the new generation comes in and sees that, they're immediately like, well, I've been lied to. And instead of realizing that, like, it's kind of like saying, oh, the tooth fairy isn't real. My parents were the ones that were putting that money under the pillow. So I need to go on a worldwide expedition to figure out what they did with the tooth fairies. You know what I mean? Like, that's what retail traders do. You come in and you see the reality of it. It's not perfectly efficient, and you go, oh, well, it's because these people are doing illegal things, or they're manipulating the market or whatever, and we fix the market and then it will be perfectly efficient again. No, it was never. It's impossible. It's impossible to accurately reflect the value of everything with a system like that. All the market does is satisfy the needs of supply and demand. That's it. That will almost do it on the same breath, even. It does really look like it's done here at 10 now. Granted, there'll probably be moves later in the day, but like for this move, it's definitely done. So I guess he could have traded the mean reversion on it coming back, but I didn't really see a very good signal on the bottom over here, other than it touching the volatility level. Didn't really see much in the order flow telling me that like it was done. In fact, they're still selling. They're still selling it even though it came back a ton. I see a lot of stuff on Reddit about people giving up on one AI or the other. And most commonly it's like, I can't use ChatGPT anymore because the router always routes me to the wrong model. What do you think of volume profile? So I have a video that I would watch. So we're going to be leaving in like 2 minutes. And the video just does a better job of explaining what's going on here than I do. Let's see here. View your channel. Videos. It's quite a ways back. So, improving volume profile. So the long and short of it, though, is that auction market theory is been disproven, essentially. It was a good theory based on real observations about the markets, but as we have learned more and gotten more data and really able to look at things, we see that what they believe was happening in auction market theory, that like the market comes to an agreement on the price and that is value. And then if something changes, then there will be an extension and they'll move until, everybody that wanted to buy is bought or whatever. That whole framework is false. The price that has the most volume at it is not value. It's often just a coincidence. And people don't trade because they think it's at value. It's the opposite. Market tends to settle where supply and demand are at their minimum. So if you've got, here's the supply, and here's a demand. And what's going to happen is where they cross are going to transact, and then there's just a hole left. There's just a hole, and then you get this little, you get this thing, right? And that ends up being the point of control. And that's what's actually going on. So if you go and you look at a chart and you read it as like, well, we were over here, this is the value area, and this is what the market thinks is the true value of the thing, and you know, you're doing all of your analysis based off of that, you're going to come to a very, very flawed understanding of the market. Yeah, and you know, I think that a lot of the things that people are doing with market profile, I think are actually that like seem to work, or like, you know, there must be something to it, even if it's not perfect or it's not a profitable strategy. I think what they're actually doing is just picking up on things like volatility. Just like we have up here on our chart, right? When we look at what the projected days range is based on the current measure of volatility as measured by the at the money options, and they predict where they're going to turn almost to the tick. And so volume profile is actually kind of picking up on that stuff. I've been learning to code well, that's good. So because I have a little series about how to code that gives you everything that you need to know. And from there, you kind of just have to look at other people's code and code your own stuff and just code a lot. Which is kind of a daunting task if you're just a guy on your own. What I would think about is coding is pretend that you're me. Pretend that you have a YouTube channel and you're making these indicators that like everybody else is going to want to look at and use. And what are the things that other people might want to look at and use, and making it, even if you think that it's nonsense, and make an indicator for that. Make an indicator for that. And that's how you get good at that, right? But how, like, to really come to a true understanding of the market, like if you were going to become a quant, you know, I would start with Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot, Julius Bonnard, and Jonathan Danier. And that is like all of the empirical data that we have about markets from a microstructure level that kind of explains all of the other weird behaviors that we see on like portfolio levels and so forth. Right? Once you've read that book, then you can go to archive.org. That's arxiv.org. And they have a quantitative finance section, and you can read the latest studies, right? And that's really the gateway to that world. Okay, well, it looks like we are coming up on our time, so I should get going. We still got some stuff going this week, right? Because we got CPI later. But it's going to be very interesting to see where we're at tomorrow, how the market decides to digest this jobs market information. I don't think that we've fully seen how everybody feels about this data. So tiny bit of stuffs before it dies down mostly. Yeah, well, I think that it will probably be still fairly active until Friday. But, you know, then next week it's going to just go completely dead. So I don't even think we'll stream next week. Anyways, guys, I should get going. I will see you tomorrow. Stay excellent, team.